In this video, we are going to be analysing Johnson & Johnson, ticker JNJ. Now, firstly, why have we gapped so much or moved so much on this earnings release? Because a lot of people seeing stocks like Tesla, Netflix, even the airlines tend to be crumbling off relatively good earnings. And the difference with Johnson & Johnson is they did beat estimates as expected. And a lot of the other markets, when they were doing this, or a lot of the other stocks when they're doing this, they were already overbought. So as the earnings come out, that move was already priced in. With Johnson & Johnson, we'll cover where it was, but it wasn't extended by any means. And then the other key thing is they lift their annual outlook. So as soon as they boost guidance, again, stocks are forward looking. So if they're boosting their potential future profits, the stock's going to move up on that. So kind of two key reasons why we're moving up: the guidance increase and where we were pre-release. And what I mean by pre-release is you can see what these dashed lines here. This range is considered fair value on a stock. So for Johnson & Johnson, that was between the area of 155 and 159. Considering the earnings came out at fair value, they were going to move in the direction which earnings came out. So if they were strong earnings, we were going to push up. If they were weak earnings, we would have dropped. Now, this isn't the case on other stocks. What we've seen on Tesla, we've seen on Netflix, relatively good earnings, but we've dropped on both of them. And I will quickly don't want to focus on these too much, but why? And that's because look where we are. We're at this blue line. This is our second deviation. We're overbought. You go over to Netflix, you can see we were overbought because we were above our first deviation. So a lot more likely that we sell off good news. That's not the case when Johnson & Johnson was at fair value, so was going to move in the direction. So that's one thing I want to note because it can clear up a lot of things while people are unclear on the direction it moves coming into earnings. Now we've gone through that, what are the key levels? So today we had 163 and 166. Both of these, we basically just flew straight through. And again, good earnings, we expect this. You can look at it though from an intraday perspective. These levels were somewhat respected. Again, here we did break through, but we got that retest. You can see we broke through, retest, and then we push to our next level. And again, when you hold a level, you expect the next level to be the target. In this case, you got the pullback as expected. You break above, you get that retest, it holds. So now you expect the move to continue up. And if we continue up, what's that next target? As of right now, that's 171.40. That's going to be our second deviation on the 6 month and our next key resistance. And if we break that right above, we have the 173.60. So this would be my key range of resistance if we continue up on Johnson & Johnson, which I could definitely see. Again, we're looking relatively weak. From the market perspective today, you have the S&P down about 0.4%, and you have the Nasdaq down 1.5%, but you have Johnson & Johnson up 6% and not really showing any signs of weakness. So again, it's performing relatively well in a weak day on the market. So don't forget that it's fighting the overall market to move today. So if we continue this strength tomorrow, again 171 to 173.60 is that key range of resistance. And if we do break that, we do have final levels at 179 to 181. These are our third deviations. I never look to hold long buys through this level from a trading perspective. Obviously, long-term accounts are going to be a bit different, but if we're holding this level as a trade, I'm taking all profits at this level. I'm not being long bias, and instead I will open a reversal position to trade this short bias, looking to trade down to targets of 173, 171, 166, 163. At a maximum, go all the way down to fair value, which is at 159. Now that range as well will be very key if we can come back down here, and even if we start pushing down here sooner, because we have two key levels. So you have this light blue. What this is the VWAP from June 1st, so kind of the start of the quarter. You then have the darker blue VWAP. This is a year-to-date VWAP. So this is always my favorite one to be paying attention to. Normally a really strong level, and that's why we gapped above. You're going to have a lot of stops trigger as we go past that level. So that's quite key. But again, yeah, if we come down here, if we break that 163, we have supports at both of those levels, and then we're back in fair value, which from a trading perspective, I never look to trade past this level or into this level. I never trade out of this level, just into it. So that would be my absolute final target on a short, would be 159, and then I would avoid this stock until we kind of get a significant move in a new direction. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.